Hey everyone, so let's talk about Japan. Because right now, the economic signals coming out of the country are, well, they're kind of weird. They're telling two completely different stories at the same time. You've got struggle and decline on one side, and then this surprising story of strength on the other. It really is a tale of two economies.
So that brings us to the big question, right? How can an economy be shrinking and growing at the exact same time? It sounds impossible, but the latest data really does paint this picture of a country's economy being pulled in two totally opposite directions. So today, let's try to figure out what's really going on here.
All right, to get our heads around this, we've got to talk about one key metric. It's called the Purchasing Managers' Index, or PMI for short. The easiest way to think about it? It's like a monthly health checkup for the economy. Basically, they survey a bunch of companies about things like new orders and production, and all that data gets boiled down into a single number. And that number tells us if a sector's doing well or not.
And here's the best part. You only need to remember one number, 50. That's it, 50. If the PMI is over 50, things are growing. If it's under 50, things are shrinking. It's that simple. 50 is the magic number, the line in the sand.
Okay, so with that in mind, let's look at the first side of this story. And it's not the happy side. We're talking about Japan's manufacturing sector, the factory floor, where things have been looking pretty gloomy lately.
So check this out. The latest manufacturing PMI number for Japan, 48.3. So right away you know that's below our magic number of 50. But it's not just below 50, it's the lowest it's been in 19 months. And this is the fourth month in a row that the sector has been shrinking. Not great. So you have to ask, why the slump? What's causing this? Well, if you look at the data, a few culprits pop up. You've got weaker demand from customers, just generally sluggish business conditions. But a huge piece of the puzzle is weaker exports, which are getting hammered by high U.S. trade tariffs. And those tariffs, they've hit key sectors like automobiles and steel really, really hard.
But just when you think you've got the whole story figured out, you know that things are looking bleak. There's a huge plot twist. Because if you look away from the factories, there's another part of Japan's economy that isn't just surviving, it's absolutely thriving.
Yeah, I'm talking about the services sector. It is telling a completely different story. Remember that manufacturing number, 48.3? Well, the services PMI is a whopping 52.3. That's not just above 50, that's comfortably in growth territory. And it's all thanks to really strong demand, both from inside Japan and from overseas.
And this just perfectly shows you the split, right? It's night and day. On one side, you've got manufacturing getting crushed under the weight of weak demand and those trade tariffs. And on the other, you've got services just booming, largely because it's shielded from those same pressures. It's two parts of the same economy, literally going in opposite directions. So what happens when you put it all together? You have one part shrinking and another part booming. Do they just cancel each other out? How do these two opposing forces actually balance out in the end? Let's see. Okay, this chart really tells the whole story. You can see it right there. Manufacturing, that bar is at 48.3, clearly in the red, below that 50 line. Then you've got services at 52.3, way up in the green. So what happens when you average them out? You get this composite score, which just barely, just, squeaks past that magic 50 mark.
That final number is 50.9. So yeah, technically, Japan's economy is still growing, but it's so important to understand that the strength in services is basically just papering over the cracks in manufacturing. It's masking the weakness, and the result is that overall growth is at its slowest pace in months.
And it's not just us saying this. Experts are seeing this exact same tension. Listen to this quote from Annabelle Fittis at S&P Global. She says the manufacturing sector is, quote, stuck in decline, and that it's seeing the quickest drop in factory orders in 20 months. That really tells you how serious this downturn is.
All right, so that's the picture right now. But what about the future? Where does Japan's divided economy go from here? Okay, now here's where it gets really interesting. You'd think the manufacturers would be pessimistic, right? Well, get this. They're actually more optimistic about the next year than the service providers are. They're betting on a few things: that the global economy will pick back up, that they'll be launching new products, and that there will be a stronger demand for electronics. But it's not all smooth sailing. There's a big storm cloud on the horizon for the whole economy, and its name is inflation.
Companies are saying, look, our costs for materials and fuel are going up, and on top of that, the weak yen means anything they import is getting more expensive. That's putting pressure on absolutely everyone.
So that's the big takeaway here, isn't it? Japan is on this economic tightrope. You've got this booming services sector that's basically holding the entire economy up and keeping it in the growth column. But the big question is, for how long? Can the hero of the story, the services sector, keep outrunning the gloom coming from the factory floor? That's the real cliffhanger, and we'll all be watching to see how it plays out.